The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 1st. How about that, folks? We're already through June. July 1st, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because, folks, living up to our potential is what we must master each and every day. So let's begin today, Marvelous Monday, with an empowering belief. What I call from wishes to desires. You know, to a lot of people, ambition is kind of a mystery. The dictionary says it's an eager desire for the distinction, power, or fame. But what does that really mean? To me, the word eager all by itself is really kind of exciting. Think about it. Kids are eager for their birthday parties. Perhaps many of you are eager for your next trade. Maybe some are eager for your next car. Or how about the holiday weekend to begin? Or how about the fireworks? And we got fireworks already in today's markets. Things like that. They just simply are eager. They sound fun, and so it shall be. So what should we be eager for? I say, how about to live a better life? How about to have a better family or eager to make more money? Remember, you and I, we have the remarkable ability to get exactly what we must. Exactly what we must, folks. That is really the key word. And all you need to do to change some of the things that you're eager for, let's just turn those things into musts, not coulds, not shoulds. That one small change of changing a should or a could into a must, well, folks, it just simply will change your life forever. By changing could or shoulds into must, it's how we deal with the so-called backbone of eager, which is the desire to change our disciplines. If we want to be ready for tomorrow, we need to finish preparing for today. If we want a better life tomorrow, it means we need to start working on it today. Live in the moment. Make today count, because tomorrow, well, it's just simply counting on it. Let's go count these markets here right now. You've got the Dow up 164 points, up 1 1/10% out there. S&P up 18 at 1624. NASDAQ up 48 points at 34.51. Russell 2000 up about 12 points at 9.89. NASDAQ up 38 points at 29.47. New York Stock Exchange up over 1% with nice wide breadth out there. 1,959 net advancing issues out there. We've got light sweet crude trading up $1.47, trading at 98.01. Gold up $15 at 23.89. 12.38. Silver up 9 pennies, so silver off to a little bit of a tough start this morning, trading out at 19.56. Our call-in number is 877-927-6648. Give us a call. We can take a look at your stock chart, whatever it is that you are trading. Let's start off today by looking at the New York Stock Exchange. You know, the New York Stock Exchange here, what we've got on my chart, I've got two things down at the bottom. I've got the summation index. There's a free special report if you haven't had a chance to check it out on the homepage of TFNN.com. It's called The Trend is Your Friend Until It Changes. And there's a tool that I teach you how to use there that you'll be able to use for the rest of your life. It's available on really every trading platform out there, and it's a tool that you want to learn and understand. Now, another indicator for trend is going to be the summation index. In this case here, the summation index got down to almost towards a bearish area back on last Monday, June 24th, June 25th area, and then began to start turning up. It ticked up on Friday, got to a level of 560. That was at 499 on the day before, and it's just starting to see a slight tick. We also had the oscillator, which is down towards the bottom of my screen here, get down into an extreme oversold territory. Sometimes these are levels where we see significant bottoms form in the marketplace. So we cannot completely rule that out. Last time we saw the indicator, well, it's been down there 3 times now, all the way going back to November 16th. The time before that where we saw a little bit of a bounce, that was on June the 12th. June the 12th, the market had moved down into the 91.80 level. Again, on the New York Stock Exchange, just had a shallow bounce out there. We saw another 2 or 3 day bounce. That was on June the 5th as it got down into that same kind of a level down there, right around the minus 330 time frame. And if I take it all the way back here to the lows of November of 2012, that's when we saw a reading of about a minus 284 out there. And so, in that case, it truly did start a significant bottom in the marketplace out here. So, right now, we've got the New York Stock Exchange trading inside the gap out here. If we take a look at going from this completed in A to B equals CD down, let's go ahead and draw that pattern in so that you can see that. There's your 1-to-1 A to B equals CD down. That's what was formed on Monday out here. Now what is normal is going to be a retracement. Let's go take a look at the retracement levels of that pattern. We're going to go from the swing point high, a key reversal trading session on May 22nd. All the way down to Monday's low. You can see you are up above the 0.382 level. This says that the New York Stock Exchange wants to not only close the gap out here, but it wants to trade to about 93.59. You're at 92.12 out there, and if ever there was a week to be able to do it, it would be this week out here, at least Monday, Tuesday, and Wednesday. Friday should be a day of fireworks as well, so if you don't see enough come. Some people celebrate them on the 3rd, or some people blow them off on the 3rd. But if you don't get enough on the 4th, well, just make sure that you join us on Friday morning because it is Jobs Friday, and that usually leads to some fireworks in the marketplace as well. And what is going on right now inside the market? Nothing more than setting up the next C point of an A to B equals CD down based on volume. We've had volume to the downside, light volume to the upside. If we also take a look at the retracement level coming off of the swing point from June 18th, where we saw the market really cascade down and form that B to a C leg here, you can also see right around 92.84 is a 0.786 level. That's of that leg. So the range here inside the New York Stock Exchange is going to be the bottom of the gap, 92.55, and all I can do is give you the range. We have to take a look at other tools and techniques or reversal candles to determine when the market gets ready to make its reversal. But the range on the NYSE is going to be 92.55. That's the low of June 19th. Anywhere from there to 92.84. That's a 0.786 level of the C to D leg to 93.59. That's where the New York Stock Exchange is headed to. Let's go take a look at the S&P 500. Let's go see what it is doing. Really beautiful patterns out here. The most recent one was our Gartley sell pattern. That was one that completed on June 18th, and that set up our A to B equals CD down. I'm going to get rid of some of the lines out here. And if you are just listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this show on channel, well, you can get the archive on channel 10, but you can get the live stream by going to your mobile device, your smartphone, going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with 3 smartphones on it. Click on that, and the show will stream live to you. And you'll be taking a look at the S&P 500 chart. Now, the S&P 500, what it did here, I'm going to pull this back. A number of things on this stock chart out here. But if we come all the way back here to the low of November 16th, that low, 1343.35, that's my first touch point, because what I'm doing here is I'm creating a trend line. Your next trend line is the low of December 31st out at 1398. And what the S&P 500 did on the trading session here of June 20th was it sliced through it like it was butter that had already been through the microwave out there, and went ahead and completed your A to B equals CD. Want to take a look and see what that looks like? Your A to B, your A point is going to be your May 22nd. High. Your B point is going to be your June 6th low. Your C point is going to be the high that came in on June 18th. 1-to-1 A to B equals CD. The price projection, 1565.50. What it actually got down to was 1560.33. Not too shabby. Now what we have going on out here is we've got a move back up to at least test the trend line. That's a trend line going back to November 16th. Whenever you break a channel or you break a trend, what will typically happen is a move back to test that trend. And that's what we have going on here right now. Where's the price level of that trend? Well, it's going to be somewhere. Let's do this. Because what you really want to do is you really want to line up some of your retracement levels along with any other tools that you've got out there. So where do the Fibonacci numbers come together? Well, off of your A to D point, meaning your May 22nd level, all the way down to your June 24th area, your .618 area is 1638. That is the first target area of the bounce. At 1638, depending on which day it does it, it'll definitely test the trend line. If we take a look, that's one area. If we blow this up and we take a look at the retracement coming off of the area here from June 18th down to the low that was put in on Monday, what we'll also see is your 0.786 level, because you have made it through the 0.618 area. In fact, that was tested on Thursday, sideways move on Friday. That says 1634 to 1638 is the range here that we should expect to see the S&P 500 move up into. And then we'll just simply assess what happens as that area gets hit. We'll assess the volume. We'll assess the candlestick. We'll see if price gets inside that trend line area or not, or it just rejects it there. That would be setting up your next A to B equals CD down. And it could be a doozy. Your A point on this most certainly could be May 22nd. Your B point on this can most certainly be last Monday, June 24th out there. It just depends on where the bounce takes us to. But we do have volume to the downside and light volume to the upside, and that's what we should expect here for the rest of this week. That doesn't mean that we don't see an intraday reversal take place in the market. Because that is most certainly one potential, because we have had fireworks the last several weeks out here, and there's no reason for us to not see some of those as well. The sellers have not gone away. I don't think they're all really camped out in the Hamptons and other places around the country out here. If we go take a look at the ETF structure, let's go see what we have going on inside the SPY. And, we'll just continue to take a look at the other three indexes as well out here. Let me do this here on the SPY. The SPY, you can see making that same 1-to-1 A to B equals CD down now. We'll go ahead and get rid of that on the chart here. The other thing that the SPY did last week was it tested and got inside the October 11, 2007 swing point. Now remember, that swing point had 233 million shares, and last week on Friday we got down there with 222 million shares. So you're coming into that swing point with a volume. You did 271 on June 21st on Thursday's session out there. On Friday's session. So you're coming into that swing point with volume. Says you're going to be back down there at a minimum. If we take a look at the downdraft here right now from June 20th, that had 321 million shares to the downside. As that area was first approached, which was on Thursday of last week, 129 million shares going against that level of 321. Today, so far this morning, in 45 minutes of trading, we've seen 31 million shares out there. No chance for this to do 321 million shares. That's what it's really going against. So that is where we're taking a look at the A to B equals CD down, because you have light volume on the way up, and you've got massive volume on the way down. The key is just where is that bounce going to take us to? We use these Fibonacci numbers or retracements as identification markers for areas to be looking at. We certainly look at taking a look at the gap here that was created. That's the bottom of the gap I'm referring to. Now on June 19th, that level is going to be 163.38. That is where you got to start poking around or looking around. Just above that at 163.97. Is your 0.618 retracement of your larger move down. And quite frankly, if that's the move that we are looking at here, I'm going to go ahead and make take a look. Let's assume that, let's use as one projection. We'll do it when we get back from break, actually. We'll take a look at the S&P 500, and we'll take a look at a couple of potential A to B equals CD patterns that are actually setting up. Right now, we've got the Dow up 168, S&P up 19. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we've got the Dow up 157 right now, S&P up 18, Composite up 47, up 1% across the board. We didn't take a look at any of the markets across overseas, across the pond. The FTSE up 1 4/10% right now, and the DAX up 0.4%, up $31. Folks, if you have not had a chance to download my free special report, The Trend is Your Friend Until It Changes, do yourself a favor. Go do that. It's on the homepage of TFNN.com. And even better than that, take advantage of this holiday weekend time that you've got and download my newsletter service, Mastering Probability. You can test drive it for 2 weeks, absolutely free. We've never done this before for this service. That means there's no deposit. It means even if you had used a service in the past, you got a backdoor in because we have never done this program. Normally, if you've taken a test drive on a service, you're not allowed to continue doing that over and over again, or there needs to be some kind of special exception. Well, because we've never done that for Mastering Probability, doesn't matter whether you had subscribed once before or not, you can still sign up for this test drive. Your credit card is not charged, so do yourself a favor and do that. All the details on the homepage of TFNN.com. Now we're going to go back to the SPY. So we take a look at, ahead of time, trying to identify some different patterns in the marketplace. We're going to take a look at different potential retracement levels. We know right now what the SPY is doing here. It's trying to take on, with lighter volume, the June 20th gap. Again, that number 162.10. Once you get it close inside the gap, that says, okay, you'll go ahead and you will fill that gap. That gap is the low of the session from June 19th. Now, we don't know if it's going to close inside the gap here today, if it's just going to go ahead and reject that area. We can take a look at a couple different assumptions out here. Let's first take a look at the mere fact that the gap, in fact, gets filled. And then you would be taking a look at nothing more than what we have going on here in the marketplace right now, just so that you can take a look at it, is nothing more than a normal bounce. On any pattern that you and I will go take a look at, on any stock chart, between any set of swing points, any complete pattern that has completed, we will always take a look at that sweet 618 retracement. We'll take a look at the 0.382 as well, because that tells us when you have a significant trend in place. In this case here, across the board in all markets, you've got the A to B equals CD pattern that completed between the top of May 22nd and the low of June 24th out there. So right now, the 0.618 level, 163.97, that is truly in play. And that larger A to B equals CD would be your May 22nd swing point high on the SPY. That's 169.07. Your B point is going to be your low on June 24th. And your C point, the projection right now we're using is 163.97. We don't have any other number to use out here. We're having a nice move, a nice bounce on light volume. Remember the definition of A to B equals CD and the art of timing the trade charts out there, whether it's a software or it's Tom's book out there, is going to be volume to the downside, light volume to the upside. In this case here, if we go ahead and we scrunch this a bit here, you'll see that the 1-to-1 A to B equals CD takes you to 150.70. That would be your 1-to-1, and that's with this retracement underway. Now, folks, I didn't do this ahead of time. I just figured we would go ahead and do this now. So how does this work? The 1-to-1.272 A to B equals CD takes you to a price point of about 147. I'm going to blow it up here. Well, I guess I can't really, but it looks like about 147.03 or something like. Let me see if I can move this line here. 147.09. At 147, I'll just move this down to 147.17. And on April 30th, my price projection for where the SPY was going to go ahead and trade to during this 6-month unfavorable seasonal cycle was 147.17. That was the first target. Well, interestingly enough, if in fact all we're doing is building the C leg of an A to B equals CD down, a large one, which I suspect is what we're doing out here, that takes you to 147.09. So how is that? That is pretty, we'll see how that pattern works out, but that is what it looks like to me it is that we have going on. Does that mean that's what it has to do? Absolutely not. But that is a pattern that is setting up. That's what's setting up inside the SPY out there. And if you want to understand how I came up with 147.17, and you want to understand the details behind it, then go download Mastering Probability because all the details are there. In fact, you've got about 40 hours worth of educational programming that comes with the newsletter service. So if you're trying to understand these patterns, you want to understand swing points or an A to B equals CD or expansions and contractions, it's all there. It's all there. You just have to commit to a little bit of time to go back through the workshop. So that's on the SPYs. Let's go over and let's take a look at, as long as we're inside the ETF structure here, let's go take a look at the Qs. Right now, inside the Qs here, let's see what Apple and Google are doing while I switch over to another screen here. You've got Apple is up $10 and change. Google's up $10 and change. Priceline is up 15. MasterCard up 14. Netflix up 740. So you've got some energy inside the Qs here. The Qs are taking on the swing point downdraft from June 20th, that high, 72.16. You're trading at 72.22 right now. Volume on that downdraft, 60 million shares. Friday, you did 28 million shares to the upside. Today so far, 8 million shares. So you got some decent volume here. The 0.618 level, 72.73. We'll take a look at the Qs when we get back. 877-927-6648. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 158 right now. S&P up 18. Russell 2000 up about 11 points, trading out at 988. And let's go back over to the NDX 100 to the Qs out here. We can see they're trading at 72.21. Volume-wise, so far, not too shabby today. 8.5 million shares in the first hour of trading. Of course, that's going into 60 million shares. But, you know, the Q's not too bad considering a summer Monday out here. We'll see if this volume continues up. What you're looking for inside the Q's, either way, bullish or bearish, just to be able to give you a release of information, is a close above 72.16 today. If you're short, be careful. Make sure you got your stops in place, because what you should see is a test of 72.73 as your next stop out there. Now remember, that's where the downdraft began, June 19th, but you start coming in there with more than 43 million shares, even though we're going against this downdraft here, and the Qs most definitely could make a move up to the 0.786 retracement level, 73.71 out there. So that's why I say you want to make sure that you have your stops in place. Again, The cues here, volume-wise, really also setting up the larger A to B equals CD down. If we take a look at where that price projection is, your A point would be May 22nd's high. Your B point is going to be your June 24th low. And your C point is either going to be the 0.618 level, which is around 72.73. If that's the case, 1-to-1 will take you down to $66 and change. In fact, I'll just draw that in here. $66 and change will take you all the way down to the 100% move of a move. That is your April 18th swing point with 56 million shares down there. That's where that would take us to. Also could be a larger than a 1-to-1 A to B equals CD. Now, the 72.73 does not have to be the stopping point. We'll see a reversal candle, I'm sure of it, and or we'll also tell by taking a look at volume when the move may just totally be over. If you take a look at the chart here, I'm going to erase this off of my screen, a couple things. One of the things that we're looking at here on this chart is the 9/18-day exponential moving average. Now, the 9 is the blue one. The red one is the 18-day. And when the 9 is under the 18, folks, that is absolutely short-term bearish out here, and that's what we have going in place. You can see, in this case, last time we came off of the April 19th level, we saw a little bit of crisscrossing going on here. But once you got the 9-day to break away from the 18, that just totally led us up to that key reversal session that took place on May 22nd. That was your trigger, if you were long, to be very careful out here. As I pull this back here, inside the cues, if we go back into the time frame of October of 2012, you can see how the 9-day had crossed through it to the downside, giving you that short-term bearish signal out here, and that took us all the way down to the lows that came in on November the 16th out here. So from a long perspective, again, this is showing up as nothing more than a light volume bounce. Setting up the C point of a larger A to B equals CD down. You've got the 9 below the 18. Now, you get the 9 to get above the 18 and start breaking away. It brings in a whole different story, and it says that, hey, back on that New York Stock Exchange chart that we looked at, that had formed previous lows when the oscillator got down into that extreme level, as it did here on June 24th, as it did on November 16th, and it says, okay, a whole different game would be in play out there. But not until all those things take place should there be any change of heart here as to what is really going on. And it would seem likely that we would see the fireworks continue in these markets here. We'd see really the fireworks go up into the sky. And then on Friday, on Jobs Friday, that could be the day for things to absolutely go ahead and cut loose out there. Let's go back to the ETFs, and let's go take a look at the diamonds. Let's take a look at the IWM, the small cap out there, see what it, too, is doing. As we take a look here at the IWM, we'll start off with that. You can see the 9 and 18 are trying to kiss each other here. Now, the small caps, the IWM has been the strength inside the market from the 4 primary ETF indexes that we follow out here. And I say that because it has only made its way back into the May gap up. That gap up from May 3rd had 51 million shares. As price came into it, was 58 million shares. So from a volume standpoint, considering the market that was falling from the sky here, the IWM really holding up well. And that means that we've tested that area once. That area again being May 3rd's low, 94.35. And so that is, if you get a test of that 2 or 3 more times, that'll set up some strong support out here. Now, what we are seeing, and that was a 0.618 Gartley buy as well that took place in the marketplace. Now, what we're seeing inside the IWM, if you go from the high out here, May 22nd's high, down to last Monday's low, you can see this has cut through the 0.618 retracement level of 97.88. It's on its way to 98.98. That is your 0.786 area. And in this case here, volume on Friday was 46 million shares in an hour of trading. You've done 10 million shares. So this has got some good volume behind it. And what that says, and it's trading inside your May 22nd swing point. So it looks to me like the IWM, it wants to at least go tag May 22nd out there. 68 million shares, the top 100.38. So it's the IWM that is one of the ETF indexes that we need to be paying attention to, because this one has been the strength. And in a market now that is moving higher, that's doing a retracement, we will learn a lot, and I think we will learn a lot from the small caps, from the Russell 2000. Let's go take a look at the Dow Diamonds. You got IBM totally got whacked on Friday, down with some big volume. We'll go take a look at IBM after we take a look at the Dow Diamonds here. The Diamonds right now are taking on the downdraft session from June 20th that had 14 million shares out there. You came into it on Friday with only 6.7. So far today, 1.5 million shares. So about roughly the same type of volume that we saw here on Friday. But today, you're now up above and inside that downdraft top. June 20th high, 149.88. You close inside at 149.88. That means above 149.88. That sets up a normal move to 151.33. That would close the gap out here, which would be June 19th. That low, 151.05. So it's going to be the range of 151.05, 151.33, maybe even up to 153.01. How will you know if 153.01 is going to get hit? Well, if we take a look at the June 18th swing point, it has only 4.8 million shares. If the diamonds are coming back in with a volume of 4.8 million or more, it says 153.01 could be a game out there. Again, that would be setting up nothing more than the next C point of the A to B equals CD down. In the case of the diamonds did make it back into the swing point of April 22nd. That had 11.7 million shares, and on Monday you came down there with 14 million shares. So we got another high volume bar out here at the low that needs to be tested, and that is your June 24th low. 145.17 is the low, 147.43 is the high. Let's take a look here at IBM. Let me see if that's on this tab right here and go see what it is actually doing today as we leave the Dow Diamonds. No, it's not on that chart. It must be in this tab right here. So give me a minute just to pull up IBM. So I'm sure that it must be in here. One moment, IBM. It's probably there. We go. Right. It was right in front of me. It was that bullseye. It was right in dead center. Now we're taking a look at IBM, and on Friday, moved down with volume 10 million shares. But that 10 million shares was really going against the downdraft that had 18 million shares on April 19th, and it held that level. Now it didn't get down and actually test the swing point, which took place the day afterwards, which was on April 22nd. That low, 187.68. But you can see even with the big downdraft that it did have on Friday, with the big volume, I should say, that it had early on, it looked like it was going to blow apart that swing area with volume, and it didn't do that. Now what we're seeing here is IBM, and what IBM wants to do is really just go back and test the June 27th swing point. June 27th, it did 3.5 million shares. So far today, you're up with 1.1 million shares. So you got enough volume behind it to at least close that gap. And the low of that gap is 195.29 out here. But IBM, and this is the cool thing, looks like IBM will finally come back down here and test this long-term consolidation. That long-term consolidation takes you all the way back to January 20th. 2012 out here. So we've been going on for about 18 months. It's a consolidation level that takes you from about 180, we'll call 185, up to about 212 out there, something like that. So you've got a nice, 27-point consolidation on IBM. And if it can come back and it can test this gap area here and do it on lighter volume, the actual gap up that it's going against has volume of about 13 million shares. You'd like to ideally see it come back there and test it with less than 5 million shares. And this, again, being the price area right around 188.97, maybe as low as the last swing point test of that area, which was 181.85 on July 12th. You come back there with less than 5 million shares, and it looks like IBM will just trade in its range here. If it breaks that area, well, then you've got that 27-point move to the downside. And if we come off of let's see here. Where do we want to take this off of? I would say we come all the way back here to the 2010 time frame as one of our markers out here. We come back to the August 2010 time frame all the way up to that high that was put in here. You can see also the dead cat bounce or 0.382 level right around that the bottom of that consolidation range, 180. So if, in fact, the consolidation gets broken, what IBM will do is move down to the 0.618 retracement level, 158. And 158 to 180, guess what? That is 158, 168, 178. There's your 20-point trading range that IBM is in. So that is IBM. That was the ETFs for the diamonds, the SPYs, the IWM, the what else? The Qs out there. So let's take a look here at, let's go look at some currency pairs. Let's go take a look at the Queen, see what the Euro is doing. Take a look at the U.S. dollar index here. The Euro has been just camping out at the sweet 618 level. And this is day number 4 now And it looks to me like, it's just building either cause to break through there, or we're going to see a little bit of a bounce here inside the euro. But the euro still traveling with inside the formation tool of our C to D leg, so it's still on the left-hand side, just taking maybe a little bit of a respite on its way down to the old 786 level. That will take you into the 128.74. Even on a bounce here, all it would be doing is setting up another intra-period A to B equals CD down. But you're not seeing a whole lot of buying action inside the euro U.S. dollar. Let's go take a look at the yen, see what the yen is doing here. Well, here's the euro Japanese yen. We took a look at the shorter-term time frame out here, and it really does look like this wants to set up the 131.94 level. That would be a nice 0.786 Gartley sell, 1.618 expansion of your B to C swing point. And at 131.94, that will be the energy that takes the market up higher into that 0.786 sell area. Let's take a look at the actual U.S. dollar, Japanese yen, see what we have going on here. That had formed a 0.786 Gartley buy pattern. I'm going to go ahead and erase that off of the screen. Let's just take a look at the retracements here that it is doing as it makes its way and continues to get weaker with the U.S. dollar index getting stronger. You can see that right now today it has made the 0.618 retracement. That level, $99.92 is the projection of that, and what it's hit so far today is $99.16. So it has made its 0.618 retracement. No reversal candle here, but this could certainly be setting up an A to B equals CD down. If we take a look at that, that could easily look like this here. If today was the 0.618 high, and that would take you all the way back into the $89 level. That would be your 1-to-1 A to B equals CD. That would take you all the way back into the time frame of January of 2013 out here. But not until we see a reversal signal will we know if the 99.92 level was in fact just simply the retracement. Now, what the what the U.S. dollar Japanese yen currency pair did have to do as it made its lows out here, it got into what? It got into that oversold condition. We hadn't seen that type of oversold condition since the lows that were put in back on June the 1st. It makes sense that it has to work its way off. Ideally here, you can see it's neither overbought nor oversold, and it does have more room to run to the upside. That says if we don't see any bears show up here in this currency pair, then that sets up 101.59 would be its next move, and that would likely be where we would see the U.S. dollar Japanese yen get into the overbought territory out there. That is on that currency pair. We take a look at Goldilocks here, see what gold is doing. It's right now trading up at level of 1242. Let me grab the right thing out here. Give me a moment here. We're going to take a look at the daily chart here for gold. We showed this in the first hour. Made a perfect, perfect, textbook perfect, price perfect, the whole thing, and A to B equals CD down 1 to 1.618 as it made its low Friday at 1179.40. The price projection was right around 11. I guess it depends on how I blow it up here, but it really 11. We'll say 1178.30. So it missed it by 10 pennies. It missed it within cents. Simple as that. Now what it's trying to do here, you got a bullish engulfing candle. So the bulls did show up on Friday's trading session. We're looking for some follow through today. And real follow through today says a close above the trading candle from Thursday. That would be a price of 1244.20 or 1242.60 out there, and that would be some proof that we would see a nice bounce in gold. Where would that bounce take us to? Right back to the high volume low from April 16th at 1321.50. It's trading at 1243 right now. If we take a look here at high ho silver, really doing the same thing, setting up a bullish reversal signal on Friday. What we're looking for here also is a close above Wednesday's June 26th candle. That was 1958 out there. You're trading at 1963, so very close. That would set up a run perhaps to the trading session here from April 16th as well, right around the $22 low out there. So that is on silver. If we take a look at light sweet crude here real quickly before we go to this break, let's go over to the daily chart of light sweet crude. What we showed here earlier, it's trading in a 12-point consolidation range out here. It's been doing that for over a year, since July of 2012. 877-927-6648. Dow's up 150. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We got the Dow up 155, S&P up 18 right now. So let me recap for you where we're at in the trading session. We're going to start off by going and taking a look at the EKG, the 30-minute chart for the ES Mini. And what we can see here, last night, not yesterday morning, but last night at 9 p.m., there was actually a reversal signal an indication of a reversal signal that took place out here in the ES Mini. Got a confirmation of it, quite frankly, at about 10:30 last night. And now what we've seen is an A to B equals CD up that is formed. That's coming off of the low at 9 p.m. last night, 1593.25. That's your A point. Your B point was the high at 4 a.m. this morning at 1609.75 and a slight pullback. That pullback here is just a 0.382 retracement, I believe. If we go take a look at our swing point, just a little, maybe 50% retracement. And what we can see taking place here on the 30-minute chart is the 1-to-1 A to B equals CD. 16.1850 was the price projection. You got up to 16.20 out there. Now, no bears in sight here, and as it's getting up into that area, it's still inside this 0.618 sell pattern out there. But I see no reason for 1622.95 to not be in its target area. What you need to paying attention to is we're still in a market that's going to trade both directions, just like we saw on Friday. And right now, the ES Mini is telling us it's getting up into the very overbought territory. And when it gets up into this area, you see one of two things. You either see a move sideways, as we did back here at around the June 27 time frame, at around the same time period, around 11 o'clock as we're going into Basil's show out here. You can see the market had moved into an extreme overbought territory. We're not in the extreme area, but you're up close enough to it where the market needs to digest these gains. And the key is going to be, is it going to move sideways as it did here, back on June 27th all the way till June 28th, or is it going to go ahead and make a deeper retracement? What you actually want to see is you'd probably, from a bullish standpoint, to see a deeper retracement here, setting up the next A to B equals CD, because if what we see here is it works its condition off, maybe moves sideways, works it off, and then pushes higher, but does it on less relative strength, that will set up the next reversal signal out here. So right now, don't chase this market. You do not need to chase this market. We got a two-way trader's paradise out here, and we should continue to see that, and we have on the 30-minute chart moved into territories where when you get up into these areas, you start to see a market that moves sideways or consolidates its gains by just simply pulling back out there. If we go take a look at the ETF structures, all that we are doing, all that the market is doing, is just setting up the C point of an A to B equals CD down. Inside the Dow Diamonds, you're looking at about 151.33. That's assuming that it closes inside the gap today. That gap high is 149.88. Inside the IWM, it looks like it may want to go ahead and test the swing point high from May 22nd. That level is 100.38. 98.98 is most certainly on its track here. That's a 0.786 retracement, but I don't see why it wouldn't just finally go test May 22nd. Inside the SPYs out here, if you get it closed today above the downdraft from June 20th, and that is 162.10. You're 162.25 right now, or 162.20. That says 163.97 is, in fact, its target level for your A to B equals CD down. And that leaves with us the Qs. Inside the Qs need to close above the downdraft from June 20th. That high is 72.16. You're at 72.14 right now. Volume on that was 60 million shares. The Qs had decent volume here and still do about 10 million shares with an hour and a half into the trading session. The Qs, the 0.618 retracement that it is heading for is 72.73. Folks, it is Marvelous Monday. That means stay tuned because Basil Chapman is up next. After Basil, we got our man Larry Pesavento, Daryl Martin from 1 to 2, David White from 2 to 3, the Tom O'Brien Show from 4 to 6. Folks, do yourself a favor. Go to the homepage at TFNN.com. Sign up for my newsletter service, Mastering Probabilities. 2 weeks, absolutely free. No charge to your credit card. Have a great Monday, and look forward to seeing you soon. Take care, folks.